I'm joined now by Danielle DiMartino Booth, CEO and Chief Strategist for QI Research. Danielle, welcome to NYSE Live.
Thank you for having me this morning on this Grand Tetons Jackson Hole Fed Powell Friday.
That's right. It's going to happen in about 30 minutes. Fed Chair Jerome Powell is going to be making his speech. What are you going to be listening to most closely for, Danielle?
I think what I'm going to be listening for, as well as other market participants, is timing. And if Jay Powell feels like he's got enough flexibility, despite the shock of the May and June revisions to non-farm payrolls, to actually put September on pause and be data dependent, even though the market's got a near certainty priced in for at least 1/4 percentage point rate cut.
All right, and what should investors be mindful of when it comes to both ends of the Fed's dual mandate, inflation and jobs, especially with the latter being the focus of the Jackson Hole Symposium?
Well, and there's an irony there that you bring up the fact that labor is this year's theme at the Jackson Hole Symposium, and you would think that Jay Powell would lean more on statistics like, you haven't seen the unemployment rate for those entering the job force for the first time this high since 1988, when the baby boomers were entering the workforce. That's actually Federal Reserve research that was put out a few days ago. We have, record numbers of multiple job holders. There are so many different ways that you can express that there is weakness in the labor market. And yet, I think in his remarks, he's going to try and lean on that inflation mandate and listen to part of what Walmart said instead of the other part of what Walmart said. Walmart said, we are seeing higher input costs, but we're trying our best not to pass them along to consumers because they can't afford the higher prices. I think he's just going to listen to that first part about higher input costs, and I think that that's what most market participants are expecting.
And Danielle, do you think there are any key words or phrases that Powell might use that might indicate that a rate change is coming?
Well, I think if he uses the word tension less, the tension between the two mandates that you just asked me about, the inflation mandate and the employment mandate, if he uses the word tension less, if he uses data dependent less, I think that markets will have more certainty. If he says that he's going to be in a more wait and see approach, then I think that we will go back to being on tenterhooks, looking at every single individual data release that's put out, and especially on a day like today when there's none of them hitting the headlines.
And you mentioned tariffs. How much are uncertainties about tariffs and global trade playing into the Fed's decision making on rate cuts?
Well, to listen to the parade of Fed officials who've spoken in the media prior to Powell's remarks in just a few minutes, it is obvious that the narrative that is shared internally right now at the Fed is to lean on the uncertain aspect of how and when and if the tariffs are going to manifest in consumer prices. We've already seen them show up in the producer price index, but it was interesting to see those minutes on Wednesday that said some members of the committee, and that meant more than just the two who dissented, Michelle Bowman and Christopher Waller, but that some members of the Federal Open Market Committee were not comfortable waiting until we saw the full effects of the tariffs, given the weakening that we've seen in the labor market. So you know that there is a lot more dissent among committee members than just what we saw with those two who voted against not moving on July the 30th.
And according to the latest data, traders are pricing in a 70% chance of rate cuts in September. And last week, that figure was 85%. Why do you think that number's gone down?
Well, it was certainly the hotter than expected producer price index that came out subsequent to the payroll shock, subsequent to the cooler than expected consumer price index. And that is really what I believe traders see as having given Powell ammunition to continue to be in this kind of holding stance, wait and see pattern that he continues to be in. It was that PPI report that really sent us from a decent small probability of a 50 basis point rate cut back down to, again, as you just said, where we are today, closer to 70% for just that quarter point cut.
Earnings season is winding down. What are your takeaways?
Well, my biggest takeaways are a reflection of the labor market theme at Jackson Hole. And whether it's Target or Home Depot or Walmart, they're saying people are spending on essentials, they're spending on pharmacy, they're spending on groceries. But when it comes to discretionary, they're simply not ponying up the money. And there are a lot of concerns as we head into the holiday season that because wage disinflation has set in, people are making less money. 440,000 full-time jobs were lost in the month of July, just last month. There is concern going into the holidays that if consumers don't pick up their spending on the discretionary side, that retailers could be in quite the pickle, sitting on more inventory than they prefer going into the new year.
Thank you, Danielle DiMartino Booth, CEO and Chief Strategist for QI Research.
Thank you.
Still to come, AI startup Tinyfoot